thanks for joining us on Realty Check. I'm your host, Trish Williams, and today we're going to be starting a new series, 7-part series. It's all about financial loans, how to get financed for different types of home, different financing programs available out there. 7-week financial series. You're going to want to follow this series and stay tuned in and see what you can learn and what works for you. On today's show, we're going to be talking about down payment assistance. Things that are out there available to help you with your down payment when you're purchasing a home. And to talk about this, we have our expert here with us, Gregory Cooke with Castle & Cooke Mortgage. And Gregory Cooke is a mortgage lender, and he is very well versed on these down payment assistance programs and is going to give us a lot of details. So Gregory, thank you so much for joining us today.
Good morning, Trish. Thanks for having me.
Yes, thanks for being back. You've been on the show before. You're going to be on the show again. So thank you. I always appreciate your input and your knowledge. I know that you really know your stuff when it comes to everything loans.
Great.
So I appreciate that. So when we're talking about down payment assistance, so just to be real general and let everybody know what the topic is here is there are programs out there that will help buyers pay their down payment. Is that correct?
Yes, they're state-sponsored programs in conjunction with the banks that provide down payment assistance for to assist with affordable housing. That's what about, not affordable financing options for housing.
Okay, great. And with these down payment assistance, what are basically the general guidelines that you can be expecting that are needed to qualify for down payment assistance?
Yep, great question. So basically, there's not a lot of people think you have to be a first-time home buyer. You don't necessarily have to be a first-time home buyer. There are programs that do require that. And what a first-time home buyer means is that you haven't owned a home in the last 3 years, but not all the programs are like that. You can sell and then buy with a down payment assistance program. You can completely do that. The other general guideline is a base credit score of a 640.
Okay.
We do need a 640 credit score. Many of our clients have had below that, and we can assist in advising on how to get those scores up. But yeah, 640 credit score. The ideal spot is to be at a 680. It opens up some options. The other one is an income limits. There are various income limits. It just went up. It was $98,500. Now it's $105,000, and that's joint household income.
Okay, so you have to make $105,000 or less to be able to qualify.
Yes. Yep.
Okay. Yep. And then one thing you mentioned, I think it is a great point that we should bring up to everybody is that coaching clients through getting ready. If your score is not quite there, best first step is to get in touch with the lender, find out where you're at and what needs to be done. They'll pull your credit report. They'll be able to see what you can work on and what can be done to get to the point that you're trying to get at. And Gregory is always good at coaching the clients through that process when that is what's required.
Absolutely. I think we've coached clients for 2 years, some of them, to get them there, right?
Some even longer.
Yep.
Yeah, there's been some even longer. And yes, it does. If you're committed, it's definitely going to happen.
Absolutely.
And we can make it happen. So when we talk about down payment assistance, is it free money?
So as the old saying goes, nothing is free. So the couple of caveats to that is the interest rates are a little bit higher than what you'll see out there. If you have your own money, certainly interest rates are a little bit lower, still a great interest rate. The other side of it is that it comes with a silent second lien against the property. So the down payment assistance program, for instance, one of them is a 4%. So you have a 4% lien against the property. It's prorated, so every month that amount goes down. And after the 3 or 5 years, depending on the program, the lien just goes away. So in that respect, it is free. But in the respect of the interest rate, they're a little bit higher than the prevailing rates out there.
Okay. And then let's go back to this silent second for a second.
Yeah.
Is when we're talking about a silent second mortgage, that doesn't mean that there's an additional mortgage payment every month.
Nope. Good question. It's interest free. It's just a lien amount that sits there. For instance, if it's $16,000, you'll see, if you pull the title report, you'll see a $16,000 lien sitting there. And then it's prorated. So if you did have to sell your house before the 3 years, you don't owe the entire $16,000 back. It's prorated down.
Okay, great. Yeah. And I had someone ask me this question the other day and I didn't know the answer to it. So I think right now is a great time for the answer because I know there's questions out there. Does that automatically disappear? And is is it a matter of months? Is it on the third year to the date, or is it amount of payments, the amount of payments that would equal up to 3 years? And does it just go away, or is there something that the buyer needs to do when that time comes?
No, the bank is aware of that date, and then the title company is aware of that date, and it's almost like a calendar notice, and then the lien would get released.
Okay,
Yeah.
and because the title company is aware of that date, it would probably not show on the title report after that, or it would show in history?
It would show as a released lien, yes.
Okay.
Yeah.
Okay,
Yeah.
great. Thank
Yeah.
you.
Yeah.
Thank you for that. So I have someone out there that was looking for the answer to that question, and there it is.
Yeah, absolutely.
So good. Who is the program for? Who benefits the most out of this program? And who is really, if someone's thinking about it or weighing their options, who do you think that this would help most?
Yeah, so for anyone who doesn't have down payment, doesn't have the closing costs, this program is for them. However, that's a little bit of a matter of opinion. If you have the money for a down payment, it doesn't mean that you don't benefit from it. I've had clients that they don't want to show me their bank statements because they think that because they have money, they don't qualify for the program, and that's not the case. I've had clients with plenty of funds in the bank, but maybe they want to keep those funds for other things, for a rainy day. Reserves is always a good idea. So if you don't have the down payment and closing costs, this program is for you.
Okay, great. And then who would you say that, obviously there are some people that reach out, and I've witnessed where they've reached out, they've asked questions about the down payment assistance program, but they chose to not use it. Who would you say, what really would you say determines that?
So if you freely have the money, the down payment and the closing costs, and maybe you're more on the rate sensitive side, I would say it's not for you. There are some caveats to the program in that, say for instance on an FHA, you're allowed to go on an FHA loan without the down payment assistance to a 56.99% debt to income ratio, which really opens up your purchasing power. On the down payment assistance program, if you have a 680, you can only go to a 50% debt to income ratio. So there's a little bit of loss of potential purchasing power. If you're below 680 on FHA, you can only go to a 45% debt to income ratio. And I realize it's really dry numbers, but really it can be the difference between qualifying for 220 and qualifying for 250,000. And for those who have the money and they're like, look, I really need to be at that 270 mark, then this program has limitations on as far as what your full purchasing power can be. The second portion is if you think you may be selling, I would probably say in less than, that there's risk that you may need to sell, in less than 24 months, that this program may not be for you because you will have that recapture on that prorated amount. So, for whatever reason, job transfers, military, something like that, if you think that you may be having to leave, this may not be for you.
If you're not planning on staying at least 5 years, then
Yep.
this is something that you need to highly consider before moving forward with it, because there will be a fee of paying back that money.
So there's two. There's 3 years. Most of them are 3 years repay back, and then
Okay.
there's one or two that's 5 years. Yes.
Okay. And my understanding is the 5 years gives you more money.
It does.
Yeah.
It does. Yep.
Yeah. And the other thing that, just to break down what you were saying, debt to income ratio, everything like that, for the people out there that don't really know what that means.
Yes.
Debt to income ratio is basically the how much you owe for certain things, car payments, credit cards, anything that you have, student loans, anything that you have payments on, and then how much income you have and what percentage of that is payments that are you're obligated to. Right. Yep. So when we talk about qualification, you have to fall within these ratios to be qualified for a certain amount. So your qualification, you can literally be qualified for a higher amount without down payment assistance than you can with down payment assistance because of the debt to income ratio. And for some people that really matters.
Absolutely. Right.
And when it comes to interest rates, of course, those affect your payment. So a difference in rates will be a difference in payment. So at a lower interest rate, you can afford more home with a lower payment. But again, that would be covering your own down payment rather than using the down payment assistance program. So there are, and if you're confused and you don't know what's right for you, that's also a great time to reach out to me or Greg, and we will discuss those options with you. And Greg has done in the past done a very great job with multiple people of showing them the side-by-sides of what each program offers and what's best for them, and the clients can choose what's right for them.
Absolutely.
Yeah, so that is a great thing. And are all down payment assistance programs FHA loans?
No, you can go conventional, and there's also VA. So there's various programs. There are veterans programs. There's teachers down payment assistance programs, so they range anywhere from 2% on the low end, 2% down payment assistance, and that's 2% of the loan amount, up to as much as 5% on the conventional side.
Okay, great. So you're not stuck to a certain loan type, and that's another thing you can review over options to see which program works for you. So if somebody were to contact you tomorrow,
yes,
or today, and they say, hey, Greg, I know that there's down payment assistance programs out there, but which one? Which one do I choose? I don't even know, my options. Is that something you would do?
Absolutely. We'd ask a few questions. It does start with credit and then discuss income, and then we'll figure out the one that works for you. So it could be FHA, it could be conventional. FHA has its own guidelines. The FHA loan amount goes to a maximum of $362,250, and on the conventional side, it goes to $548,000. You can go above $362,000 on FHA as well by buying a duplex, triplex, or fourplex. But yes, there are guidelines on the different programs, and that's what we do: is sit down and work out, see which one works for you.
Yep. And we're going to talk about buying duplex, triplex, fourplex in another show coming up here in our series. So that's a good point right there. And just a quick note on that: you can use down payment assistance to purchase those multiple dwellings?
Yes, you can. Yes, you can, as long as you don't go over the loan amount thresholds. Yes.
Okay.
Yeah.
And loan amount thresholds on a single family residence for down payment assistance, is it still $400,000, or is it has it changed?
So for FHA, it's $362 for single family residence. For conventional, it's $548,000. You can buy quite a bit of home for $548,000 up to.
That's with down payment assistance?
That's with down payment assistance.
Oh my goodness. That number went up.
It recently went up. It was $500,000. Now it's $548,210, something like that. Yeah.
Oh my goodness. Yeah. I didn't know it went up. That's amazing. That's a lot of home for, with the down payment assistance program. That's
so the income limitations went up and the purchasing power went up.
Okay, great. So if a client comes to you and they want to purchase, they want to use the down payment assistance program, they want to, get the highest amount of down payment assistance available to do their purchase, they still have out-of-pocket expenses and other costs that they need to consider prior to moving forward? It's not a 100% zero cash out program.
Correct. The down payment really covers, depending on how you look at it, it's covering the down payment, or if you have the down payment, it's covering your closing costs. So FHA down payment amounts are 3.5%. Conventional could be 3% or 5%. And so you would still have your closing costs, which can range anywhere from about 3.5% in closing costs. So you have options then where potentially the seller can cover those closing costs. I think that might be a challenge, at least in today's market.
Very much so.
Yep.
Yeah.
But if you don't have that, then you can get a gift from family. So mom, dad, siblings, Uncle Bob can gift you the remaining closing costs needed. You can pull it from your 401k or IRA. We can certainly assist you on how to do that. Some retirement funds, and or like I said, the closing costs from the seller. Yeah.
Okay. All right, and then there are also other fees associated with a home purchase, such as your home inspection, your appraisal. Those are upfront fees that you would pay. You have to consider your earnest money deposit amount, which we can always talk about those when we meet, and what to be expected for that. Earnest money deposit is simply a deposit. It's not an additional fee, and it can be credited towards those cash to close costs that you'll be looking towards at the end. So those are all things we can discuss with you. If it sounds confusing, we definitely can help walk you through and explain what all of that means. Now, you mentioned getting gifts from other people. So you can get help in addition to down payment assistance.
Absolutely.
If somebody were to gift you the money. Now, when we talk about gifting funds, this is not a loan. This is not someone, it's not your parents giving you money saying that you have to pay this back.
Right.
It needs to be 100% a gift, correct?
Correct. Yep. Mom, dad, or your sibling will sign a document with the lender. It'll have their name on it and your name on it, stating that it's a gift and it's not expected to be repaid back. Because if it's a loan to us, then we would need to count that liability against you. And so they can gift the entire down payment. They can gift the down payment plus closing costs. And so it's a simple document drawn up that just gets added to the file.
Okay, great.
Yep.
And what if you were to, what if it's a first-time home buyer and they need a co-signer for the home, but the co-signer owns a home already? Would they be able to qualify for the down payment assistance programs? Great
Question. Yes, they can. And the great part about that was also changed is that before, the co-signer's income was calculated against the total, and that's not the case anymore. So if your co-signer owns a home, just their income is going to help you qualify. Hopefully they don't have a lot of debt, but if they're a homeowner, then you still qualify for the down payment assistance program. However, it is a joint household income. So if you're married, have a spouse, and you make $98,000 and your spouse makes $40,000, and your thinking is, I'll just leave the spouse off the loan, it doesn't work like that. Your joint household income is $130,000 now, and so you would be above that threshold limit.
Okay, and the co-signer's income is or is not calculated into that?
It's allowed to help you qualify, but it doesn't go against the income limitations.
Oh.
Yeah.
Wow, that must have been a recent change as well.
Also a recent change.
This is why it's so important to talk to lenders. Yep. I tell people all the time this when they call me. I say, I can give you what information I'm aware of, but I'm not a lender, and get it from the lender. So,
Absolutely.
I always will connect them with you and just tell them to get it directly from you, because guidelines change. Things change in real estate all the time. Things change in every profession all the time, and our licenses require us to keep up with the changes. And that's why you are definitely the source of the information that people should get, because when those changes happen, the logistics of it.
Yep.
So that is very important. So getting back to purchasing with down payment assistance.
Yes.
Can you buy an investment property with down payment assistance?
Good question. So the down payment assistance program is for primary residence only. Primary residence, not a second home, not a vacation home, and not an investment property. However, you can buy an income producing property provided that you're also living in it. And so what does that mean? It's
Fourplexes and duplexes and things like that, where you are an owner occupant
Yes.
of one of the unit. We're going to be talking about this, so stay tuned later on in our series for this one. But that means that you're occupying one of the units, but the other units in that building are paying you rent every month. And in most cases that I've seen in the numbers that we've run, usually the rents from the other units cover the entire mortgage payment for the unit that you're occupying.
Absolutely. So a great way to start that investment portfolio is by buying a duplex, triplex, fourplex, and then have those other tenants basically helping you pay your mortgage, and then you can go on and buy something else in the coming years.
Yeah. And doing that though, you do have the requirement is that you occupy one of the units.
Correct.
If you're trying to rent out all 4 units, then it's no longer an owner-occupied situation. It's then an investment property solely, which will have a whole different set of rules and criteria and everything. So back to the down payment assistance programs available, how many programs would you say, just different programs, ballpark, that are available to people here in Nevada?
So any given time, they've fluctuated between 2 to 4 different down payment assistance programs. So for instance, I've brought up the idea that there's an income limitation of $105,000. If you go to Nevada rural, then the income limitation is $130,000 plus. I think it's over $130,000 now. And a lot of people think, oh, Nevada rural, I need to live out in, way out in some farm or something like that. South Summerlin is Nevada rural. Southern Highlands is Nevada rural. Parts of Spring Valley is Nevada rural. Of course, large parts of Pahrump and that sort of thing. But then the income limitations are higher, and so maybe you especially if you're going to Pahrump, maybe you can buy a larger piece of land. Your dollar probably certainly stretches more out there. But there's At any given time, it fluctuates between 2 to 4 down payment assistance programs.
Yeah, and I've been on Nevada Rural's little map thing. They have a map tool that tells you where it qualifies. You can type in the address and see if it qualifies for that program.
Absolutely.
And
ask Trish for the map tools. You can get it and put it on your phone, and then basically figure out parts of the Northwest. Absolutely, parts of the Northwest or Nevada Rural as well, which makes sense.
Even parts of Whitney area, which I was super surprised because that's not usually or the way I guess my thoughts were processing it is that rural, even the parts that are within the city, are the newer parts on the outskirts of the city. So I was very surprised to see those areas in there as well. But
Mountains Edge, Southern Highlands, South Summerlin, who knew? But
yeah, they do qualify. So definitely don't think that just because it says rural that it's not going to fall within the criteria. There's always, you can, anytime you have anything in question, we can always help provide you sources and answers on things like that.
Absolutely.
Yeah.
Absolutely.
And then back to VA. So I want to talk about that for just a second. There is a down payment assistance program that's also available to veterans does that work in conjunction with the VA loan?
Yes, it's at the same time. So, VA loans already have no down payment. Even the idea of it being dollar down, it's not a dollar down anymore. But then you have closing costs. And so this program would then assist with closing costs for the VA loan.
Okay, so the veterans can actually use the program to help them pay their out-of-pocket expenses.
Out-of-pocket closing costs,
even though they have no down payment.
Correct.
Yeah, so there's options there. And then, the teachers program, we have a teachers program that if you're, I believe it's K through 12, correct?
K through 12, you must be an in-classroom teacher. I've had assistant principals and principals before, and it's not for them. You need to be an educator. It's K through 12, to K through 12 school, yes.
Yep. And if my understanding, if it has not changed, teachers programs limited to an FHA loan?
Correct, yes.
Yeah.
Yes, correct.
Yeah, and it has certain criteria there, but it is just another down payment assistance program. So there is so many options on what could work for you.
Absolutely.
And, if you're out there, a lot of times I talk to, first-time home buyers or people that they're not even first-time home buyers yet. They're renters, right? And they're looking at one thing that we're encountering, of course, in this market, the way that our market is right now. The owners of a lot of these rental properties, they're seeing that they have so much value. Their prices are raising, and they want to sell them off. Definitely, there was all these restrictions on things that were happening over the last year, and they're wanting to sell off these properties. So there are a lot of people that are in rentals that are getting notices from their landlords, and they're starting to consider that when you're looking at the rental prices that are out there, and the rental market is, it's
expensive to rent now.
It's expensive to rent, but not only expensive to rent, they have low inventory as well. There's inventory. There's an inventory shortage across everything right now. So finding a rental is a challenge, and a lot of these renters are saying, well, why am I still paying rent? And I talk to them and they say, well, I don't have the money for the down payment. I haven't saved up enough money yet to make a down payment, and I don't think that I could move forward. And in many cases, the cash that it would take for them to get into a rental, your first month, your last month deposits, security deposits,
cleaning, pet deposit, if they'll even allow you to move with your pets to the new ones, because they can be really, discerning as to who they want as far as a renter. And I think Trish and I would both tell you, 6 months out from your rental lease coming up is the time to definitely start the process. Sometimes if you're credit challenged, as soon as you move in, then we can start working that process. But 6 months out, if you have any indication that your landlord may want to sell, now's the time, because if you do need to save a little bit of money or something like that, we want to do it as early as possible.
Yeah, even if it's not, even in the case where it's not, if you don't have indication that your landlord's going to sell, I believe in security for some point. I do think that if you're in a rental, at any time that could happen. And usually when the landlords serve you notice, it's 30 to 60 days. They don't usually give a lot of notice to you that they're going to be selling. And it's, in any case, when you own your home, you're going to have a lot more security for it. So if you are renting or whatever circumstance that you're in right now, with the rates being so low and with payments literally on mortgages are lower than rentals in most cases at this moment, you should certainly be thinking about your plan to purchase.
Yeah, we've had clients that think that, that, oh, it's great, I'm in a month to month with my landlord, it's all great, whether it's been a year or 6 months, and then the landlord calls and says, hey, I want to sell. And like Trish was saying, it's 30 days, maybe if you're lucky, 60 days. So really being prepared in advance is the way to go. If you have no intention, what we do, or at least what I do up front, pre-qualifying you, there's no obligation, no cost. It's just a game plan. And then once you're ready, then Trish will be happy to take you shopping.
Absolutely, absolutely. And and also let's talk about that for a second. The importance of getting that pre-approval before going shopping.
Right.
It's putting the cart before the horse. It's not you should not be shopping out there shopping, looking at homes without a pre-approval letter. Though you definitely have to get those numbers down. Mm-hmm. You have to know what you're looking for. And in a competitive market like this, you can fall in love with the home. And you could be a week out from getting your approval together, or sometimes in some cases even longer. Yep. And you're not going to be able to get that home because you didn't get everything secured in time to be able to offer on it.
Absolutely. Yeah, we've had clients, whether they're with their current bank or they're from out of state, and they have a letter and it says, yeah, I spoke to my banker online and I told them my numbers. And then you sit down, whether you're W-2'd or especially self-employed, and then when the underwriter really looks at it, and then to find out you don't qualify for $400,000, you qualify for $300,000, but now you're 25 days in escrow, $495 minimum for an appraisal, $350 about for a home inspection, plus your earnest money deposit. It's not the time, to be insured, and that's what I do. I collect all your financials. I review everything to make sure that when you're shopping, that you really know your options, that you're ready to go.
Yeah, and I appreciate that because, the worst thing for a realtor, for anybody, I am a realtor, a buyer, a seller, for anybody is to have somebody in contract and then find out that there's issues that weren't looked at ahead of time. So that's always lenders doing their due diligence. I wish all lenders did their due diligence and got all of that worked out in the beginning before sending the buyers out shopping, before issuing that letter to the buyers to tell them, that letter's basically your green light to go shopping. Right. And we don't, we definitely want to make sure that green light's a solid green light because it's hard on everybody involved when it can't work out, when those loans start falling apart. And
well, it can be expensive. You've been in this for a long time, many years. You've had movers that are on their way. We've all had movers coming down from Washington State and thinking they're closing on Monday, and they're in the truck on Friday to be called by their lender saying, "Hey, we've got a problem." And I'm local. Trish is local. We answer to the community. So
that is one of the benefits that I love personally about working with a local lender is it is our community. I mean, you talk to sometimes people will have these lenders in, other states, virtual, on the phone lenders or whatever you want to call them. There's so many options out there. But I do like the working with somebody here locally. They live in the city. They know the market here in this city. So many times I've talked to lenders that are in other states that just don't understand what we're dealing with here in Vegas. They know what they're dealing with in the market in the state where they live in, but they don't understand what obstacles we have here. And without that understanding, it's hard to get them to really be connected to what's going on throughout the transaction and in this. So I do like the idea of the clients working with the local lender and also working with somebody that's going to explain to them what's going on, options, differences, and explain to them what's happening. I mean, it's so very important.
Absolutely. Yeah, we can do things on the phone, face-to-face, even Zoom. We've done pre-qualifications on Zoom. Just, hear the numbers, black and white, next to each other, showing you the differences. So
Yeah, that's great. That's great. So, Greg, when people are interested in knowing more, and if they want to reach out directly to you, how do they do this?
Yeah, Gregory Cooke, Castle & Cooke Mortgage. I can reach that 702-324-6229. Text, I can respond via text or chat. I can even send you a text link to qualify completely online and easily to download your documents if you like, or we can certainly make an appointment. We have 2 offices, one in Henderson, one in Northwest in Las Vegas, and can meet anytime.
Yep. And when they start their application, if they are interested in the down payment assistance programs and learning more and knowing more about those programs, is that something they should mention to you up front, or is it?
No, we'll explain too. We'll let you know that you do qualify for something like that. If you're ready to get in now and you're FHA, but you have a 630 credit score, but you really want to shop now, then the down payment assistance program isn't quite ready. But if you're not ready to shop until this summer, then chances are we can get you from the 630 to the 640 needed or above. And but no, we'll let you know that you do qualify for a down payment assistance program.
Okay, that's amazing. That's good to know. Because sometimes I have people ask me that too. They're like, what's the name of the program? Do I have to mention it specifically? And what if I don't know which program I want to use? And I'm just like, just talk to the lender.
Yep.
Tell them what you want. Tell them your questions, and they'll go through it with you and definitely make sure that they're putting you in what's right for you.
Right.
And that's what, at the end of the day, it's all about what's right for the client.
Yep,
Yeah.
absolutely. You're going to live in our community. We want you to be happy.
Yes, no, most definitely, and we want you to, definitely be when all is said and done, feel like everybody has done right by you. So
tell your friends and family that you had a good experience, so that we'll do more.
Yeah, absolutely. And you guys, if you need to talk to me and you want me to get you in connection with Greg, get you any questions answered on what's out there, what's available, give you a. Once you talk to Greg, I can give you a list of homes that are available for what you're looking for. All of these things. Any questions, reach out directly to me, 702-308-2878. That's Trish Williams team, Keller Williams Realty, the marketplace. And thank you guys for joining us on Realty Check. Next week on the show, part 2 of our 7-week series, we're going to be discussing VA loans, and we're going to be talking about how to use your VA loan. So you're going to want to tune in for that. And we have a jam-packed 7-week series. As I've mentioned before, Greg will be joining us again in a few weeks to talk about how to purchase a multifamily unit, such as a duplex, triplex, or fourplex. So that's going to be a fun show as well. Keep tuning in, follow our show, take a second to leave us a review, share it with your friends, and thank you very much for joining us. Have a wonderful day.
Thanks for having me, Trish.
Thank you, Greg.